Yo, yo, gotta check that news. What is news talking like? So we free of news until 10. Powell speaks at 10. It's an hour. Look like a ranging day on gold. It looks like it's gonna go sideways. I could probably look out for another kind of play because I don't really know what's going on. You okay, mommy? All right, we need a zone created. I look at the day. I'm like, damn, wait, hold on, because them shoes supposed to come out. Yes, sir. I'm supposed to get them. So these drop at 10 o'clock. Bro, I hate when my brightness goes down by itself. Look like we're respecting the 4 hour and the 1 hour. Definitely in an uptrend. We're definitely in an uptrend. New York opens at 9:30. I mean, I still might jump in, depending. But if this candle could break this high, come back and test. What's good? What's good, y'all? What's good? We're ultimately in an uptrend. The problem is, though, is I have two demands. No, I have three demands. It's on 5-minute. We got invalidated, okay. But we got a 15-minute also. And a daily. Is respecting the 15 right now. But we also have two supplies, an hour and a 4 hour. So I don't know what to get in. Which one? But hopefully, market open us in some type, give us some type of direction. Hopefully, let's see. Okay, so we got a demand right here. Yeah, that 15-minute hell. That 15-minute hell. I'm not trading anything higher than 5 minutes. So they got another supply. 15. It's about to invalidate the 1 hour, but the 1 hour is making a supply. I mean, demand. We're talking about demands. Let's see what the 1 minute is doing. I mean, it's just above it. I mean, it might be invalid too. Powell supposed to be speaking, and the 9:30 candle opens at New York. So we won't be trading, but let's see if hopefully we don't get like a crazy spike. Hopefully.
Look what I got. Wait, why is my album called Simplified Financial Planning? It's a great way to tell financial professionals about Nationwide's tools and resources. None of my songs are about finances. About that. There's still time. Is Chairman Powell of the Fed have to make a decision? Well, my colleagues at Peterson Institute, Michael Clemens, Warren McKibben, and others, as well as others working in the field, have established basically that migrant workers, whether documented or undocumented, are a benefit to the U.S. economy. You were saying, talking to Bostic and leading in, why did we have this soft landing? Why are we
too early? I can't trade right before. I can't do
actually a lot of immigration.
It's 9 minutes.
It's not that they take jobs from Native people. That is a lie. They do jobs that Native people mostly don't want to do. They do food processing. They do fruit harvesting. Right. They do residential construction, low-skilled, dirty labor. They do cleaning jobs. And these are inputs to production. And the more of this you have, actually, the more Native jobs you have, and the better your fiscal situation. I got bad news for you folks. My nerd book of the summer is from Adam Posen, Marie Sapsfeld, Doug Irwin, and all at the Peterson Institute. It's a beautiful 50-year look back. And you have a blistering comment in the beginning where you talk about in foreign exchange, our non-system. Let's bring the non-system over to Fed policy. Do we have a Fed policy that's a non-system now because we're making it up as we go? Well, as you indicated before we started talking, Tom, you were talking about the idea that like every central bank, you just get through things. And so 32 years ago, Bernanke in Michigan wrote an article in which I thought was seminal, talking about the idea that central banks are firefighters. They deal with the problem that's in front of them, and then they move on to the next problem. What inflation targeting, which Bernanke, Michigan, Laubach, and
we're in the zone.
Was about
922.
a little more anchored in a more specific way than Mohammed was talking about. That you look at the 2-year ahead forecast, you look at where inflation is going, and that's your guide. And this is why I'm out there beating the drum, as it were, because I feel that it's fine when you're at inflation's way too high and you know which direction you're going for the next 2 years to say, okay, I'm data dependent. It's not fine when we're about to have a pivot point, largely due to the election, but it's still a reality that towards a much more inflationary environment.
Peter Orszag and Robin Brooks are writing. They're in another institution in Washington. I can't remember the name of it right now. But Orszag and Brooks are writing about we're underestimating how we're still with this pandemic. From where you sit at the Peterson Institute, or to use Orzag's phrase, are the glide paths of the pandemic still in place?
I love that essay from Peter and Robin, and Peter's actually on our board of directors, I'm proud to say. But I actually take it slightly more positively. So I'm in the midst of some work about the idea that actually the huge job dislocation that we saw during COVID, nobody anticipated it, but it ended up being productivity enhancing. What you see is a bunch of people moving jobs within the same industry to better employers, better benefits, better capital, sometimes moving up. And this has jumped up productivity growth and helps explain why we have the soft landing we have. Is that going to go on indefinitely? No, it's a one-time shift. But I think that we have seen more benefits, bizarrely, unexpectedly, from COVID.
No Fed official has dissented at a meeting since June 2022. This matches the longest streak going back to 2003 to 2005. Is that a problem for you?
It's indicative of a problem, yeah. I mean, I think, Lisa, I retweeted, I think you put that stat out yesterday, and I retweeted it because it's potentially a sign of groupthink. Now, again, when you're in a crisis, and this was true in 2008, 2009, and arguably it was justified in 2022, 2023, that you wanted to have unanimity. You're so far away from where you need to be, you don't want there to be any dissent. But now that we're coming to a choice point, it's a problem. And it is, Chair Powell apparently at the previous press conference said he'd be fine with some dissents, and I'm glad he said that. But it's, I think, time that they start expecting a dissent.
Adam Posen, always wonderful to hear you dissent and not think in a group think kind of way. Adam Posen of the Peterson Institute, thank you so much for being with us. If you were on the Federal Reserve Committee, you would be the dissenter, Tom. I think that's for sure.
Adam Posen, public service to the Bank of England, where Catherine Mann is right now. And I've stayed to say this, as Farrell's been in those press conferences, they do it so much better than we do in terms of outlining dissent. In fact, Catherine Mann has been a leader on the more hawkish tone of the dissent at BOE. Adam Posen's agreeing with me. We got through this without talking Red Sox baseball.
That was by design. I will say that this is also the longest period of time between when the Fed at last hiked rates before they cut rates. Going
You're expecting that 4 hour, 1 hour zone.
2006 time period. It just is an interesting moment because we're looking at a time when it was quite obvious what the Fed had to do. Now it's less so, and I think that
the turning point at the choice point that Adam was talking about. That's where we are, and that's where they get paid. I mean, this is where it's real.
And right now, you're seeing people get paid a little bit in markets. You're seeing up about 0.6%, reversing some of yesterday's losses, the biggest down day in about 2 weeks. Coming up next, do not miss this. Former Cleveland Fed President Loretta Mester here on set. Mike McKee, I imagine.
Learn about crypto and get rewarded as you learn with Coinbase Learning Rewards. We've paid out over $100 million in crypto rewards since Coinbase Learning Rewards launched in 2018. To start earning, just watch short videos, answer simple questions about what you've seen, and get rewarded. Get started today on Coinbase.com/learning-rewards.
Building your online business? Go to Wix.com and set up your store on a single integrated platform. Add products, showcase them dynamically, and seamlessly track your inventory. Accept multiple secure payments and design your storefront down to the very last detail. Get all the tools you need. Drive more sales with customizable gift cards and flexible product subscriptions. Retain customers with a point-based loyalty program, email automations, and reach millions with sales channel integrations. Complete your your setup.
Okay, it's respecting his zone. But look what time it is. It's 9:30 basically.
Shape the next phase of your business. Build, manage, and grow from one place. Go to Wix and launch your online business today.
This is a risky trade for several reasons. It's a risky trade. Like all the way across the board is risky. So looking like I'm gonna pass. I have to. I have to pass to this trade.
I think most investors are intoxicated by the opportunity in artificial intelligence. $160 billion being spent this year. That's just one data point. Another data point is a $3 trillion market cap for NVIDIA against $80 billion of sales on a trailing 12-month basis. Obviously, a lot of growth is expected for NVIDIA and for other businesses in the space, but that is yet to materialize, and it's impossible to know what the scale will be of an NVIDIA or other
Let's see.
artificial intelligence ecosystem. I think investors are just so focused on the opportunity set, what it can be, and it's a self-fulfilling prophecy. If you bought NVIDIA a year ago or 2 years ago, you're pretty excited about where it is today, and you think that it could go to the moon. As a result, you don't really focus on the risks. You're sort of just too excited about the opportunity.
People ask me all the time, what is the key to being a really good investor? I tell them it's to surround yourself with and work with the best investors.
This thing gonna buy.
On Bloomberg Wealth, I'm going to
This thing gonna buy, y'all.
the greatest investors in the world, the people that I would like to have managing my money.
To be a value investor is to pay less than the business is ultimately worth. And if the price 2 years from now should be considerably higher than it is today, the stock is likely undervalued.
About 25 seconds until the market open. We are in Wyoming for the Jackson Fed. Tom will be counting us down. Right now, you are seeing a lift in the market ahead of time. About 0.6% gain on the S&P. Seeing the NASDAQ actually outperforming, kind of reversing the losses from yesterday. Yields a bit lower as well.
I can we go to the Greenspan moment where Alan Greenspan used to always say, whenever you pay attention to Jeff
I don't invalidate it.
of any basic economic textbook, bag, man, Q, whatever, the stock market matters. The stock market's screaming something. I'm not sure what it is, but it's up and away.
Well, it's screaming that maybe it's a reversal of yesterday's dashed hopes about a 50 basis point rate cut. You're seeing yields reverse once again, down about 2 basis points on the 10-year. The 2-year is really what I'm watching today. And frankly, over the past year, down more than 1 percentage point since the last time that we were gathered here at Jackson Hole, at a time when people are really expecting some sort of beginning of a rate cutting cycle. Unclear, though, just how deep that will be and whether gradual means 50 basis points at some
And
point.
the push, that's really well done about the last 12 months and about the dynamics we see. But the push here has been everybody looking for some form of GDP slowdown, NBER recession, not some other vanilla flavor of it. I don't know. It hasn't happened. Well, hardly matter is a recession. Hasn't happened.
Not only hasn't it happened, but the S&P 500 is up 25%, more than 25% since August 26, 2023, when we last heard from Jay Powell. The focus there very much will bring down inflation. Now we're expecting to hear much more about employment concerns and maintaining a robust labor market, as we do see the unemployment rate tick up about 0.5% from 3.8% at the last time he spoke to the current place of 4.3%.
And the word that everybody uses is solid. You know, when you have Loretta Mester coming up, the answer solid doesn't cut it. Because the mathematicians go, what in God's name is solid? But they're a solid economy. Well, I don't know what that means.
Well, we'll find out from Loretta Mester, who's sitting us. She is former Cleveland Fed President Loretta Mester, and this is the first time that she's joining as a non-Fed member in 10 years at this Jackson Hole meeting. Loretta Mester, President Mester, I will still call you that. You've always been a thought leader. How much do you hear more dissent than usual among members at a time where we really are in a pivot?
I'm not hearing that much dissent, frankly. I think we're in a good place in terms of where the economy is. If you think about inflation, look how much it's come down. You know, we're in the 2.5% range, and the labor market is moderating. There's definite signs of that, but it's not weak. Right? It hasn't turned into a strong, weakness coming into it. So we're in a good spot. And now what the Fed needs to do is make sure that it can maintain the momentum of inflation going all the way back down to 2% while keeping the labor market healthy. And I think that's where the focus is going to be. If you remember at the start of the tightening cycle, we had to go very aggressively because policy wasn't well calibrated to where the economy is and where it was going, or was and where it was going. And now we want to make sure that, the Fed wants to make sure that policy stays well calibrated to the economy. So the discussion now, I think, is about, we have a dual mandate. We have to focus on both parts of that. We have to be forward-looking. It's where the economy is going, not necessarily where it is here today, where it's going. And that's why I think now it's actually appropriate to really be thinking about, okay, it's time now to enter this new phase where we can start normalizing the policy rate.
Wall Street and the financial media want specificity. They want certitude. They want single point statements about exactly where we are. The reality is, just to look at productivity is a capital analysis, a labor analysis, and an all-in analysis called total factor productivity. The noise there to me with the overlay of technology is highly uncertain. Do you have any handle of the overlay of productivity and technology's effect on the American economy?
Well, we've seen over history, right, that technology can be very additive to productivity growth, right? That's kind of the engine of an economy that's increasing and having, potential growth rise. But in any point in time, it's very hard to measure productivity growth. Even if we didn't have this big technological innovation of AI, it's very difficult to measure it. So you have to take into account that there's uncertainty around productivity growth. Some estimates say that we're still in a low productivity regime. Other estimates are saying, let's look forward, maybe we're going to be in a higher. But for the Fed right now, right, that's not sort of the focus. The focus is, are we calibrated well? Is policy calibrated well to the economy?
But you've been great on this. She just said they're not focused on productivity. We have to be, because business leaders every day are focused on those outcomes.
They've sort of been forced to inflation and a lack of workers, and they've been forced to put investment into productivity. We'll see if it starts to pay off. But Loretta's right. At the moment, you're not seeing it, but that's not the key for them. But I do want to know how you respond to the criticism that the Fed has not communicated well what it's thinking and what it's planning, or is not planning, what are the potential outcomes, because we've seen some very wild swings in the markets as data comes around. Have you said data dependent too much?
I think there's a misunderstanding of what data dependent means, and that means that I think Chair Powell today will be explaining where he sees policy going, not necessarily at the next meeting, whether 50-25, which in some sense is really not the big issue. I know for financial markets it is, but not in terms of monetary policy. It's really, what's the path forward? Are we beginning to bring policy down? And the pace, of course, and the magnitude eventually of how far interest rates go down, that's going to depend on how the economy evolves, right? But we're going to enter this new phase, I think, and appropriately so. In July, I probably wouldn't have supported actually moving the rate down in July, and of course the committee did. But I could have made a case for it, and that's a change, right? The economy has changed enough. Inflation has come down quite a bit. It's on a path, I think, where we can be pretty confident it'll get back to 2%. And now we really have to balance both sides of the mandate. So it's basically keep the momentum going on inflation at the same time making sure that labor markets remain healthy.
What do you think it would take for the committee to decide you needed to do more than the standard 25 basis point cut?
So I think it would have to be that, somehow they thought they were a little behind and they needed to catch up. And frankly, I don't see that in the data. I think they're actually in a very good place. Now, if it turns out that, the forecasts are saying, wow, we may be seeing the moderation in labor markets and even more than moderation. If we actually see a weakening, they may have to adjust that and then do more. But I think there's sort of a record. If you think about when we started to raise rates, right, we started at a 25, then a 50, then we did our 75s, and that's sort of the preferred path because that means you're not doing too much too ahead of time. And the other thing I think I would be worried about is if you do a 50 to start with, the markets then, build in even more. And I think that's a calibration that you have to think about when you're doing this. So I think being steady, right, thinking about what the right pace is, geared to how the economy is working and evolving is the right way to go.
You said that you expect Jay Powell to come out and give a sense of where we're going. And I think that's actually the frustration for a lot of people in markets. We don't know where we're going. We don't have a sense of what the neutral rate is. Right now, the market has 200 basis points of rate cuts priced in by the end of next year. Is that appropriate? What is neutral?
Well, remember what the markets are doing is, and appropriately so, looking at different scenarios, right? They're waiting, and then when you get those kind of things out of the financial markets about how many rate cuts, it's balancing different scenarios. When the Fed's talking about, where they're saying is, they're talking about, here's what we think if the economy evolves as we expect would be appropriate policy path. But they alternative scenarios too. So it's kind of a different answer or a different answer to a question. And that's, I think, the frustration is that the Fed is trying to answer.
All right, I know trade day.